Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about my own stocks portfolio and update you on my positions, the return of the portfolio, and a few changes to this portfolio during the last 2 weeks. In the last few months, we see lots of ups and downs in the economy and the stock market, and of course my portfolio. The dollar value of my own portfolio at the moment is around $52,000, and our combined grand portfolio of me and my wife worth around $60,000 today. I mentioned this before, but a lot of finance-focused YouTubers don't like to share their portfolio performance when we are in a bear market and everything, including index funds, are in deep red, as they will think they will look stupid and they only want you to see their portfolio when it is green and we are in a bull market. I think it's important to actually share the portfolio performance when we are in a bear market and demonstrate the process of long-term investing. I am actually excited about these dips in the financial markets, as I can accumulate more shares with the same money I'm investing every month and bring my average cost down in the companies that I love. In this channel, I don't tell you what stocks to buy because I don't know about your investment goals, your risk tolerance, and your financial situation. But I will tell you what I am doing with my own money and I show you the process of evaluating different companies. So if you like to see how I value various companies, especially Canadian companies, see what I am buying and selling every 2 weeks, and see the performance of my portfolio in the long run, make sure to subscribe and hit the like button so this video can reach a wider audience. While the short-term performance doesn't matter, I always like to compare the performance of my portfolio performance with S&P 500 as the average return of the US stock market in the long run. And my goal is to be able to beat this index in terms of the return by a good margin over the next 10 years. I used pretty much all of my investment in 2020 to buy a house, and therefore I started this new portfolio in January 2021 and slowly dollar cost average into stocks that I found them undervalued or fairly valued but with a great quality. I will try to update you every 2 weeks with full transparency and show you the exact performance of my portfolio and also my wife's portfolio, which we consider them one grand portfolio. So yeah, I just want to first start with asset allocation. And as you can see here, most of our net worth, I mean me and my wife, is in real estate at the moment. And this is the house that we bought in 2021. Next, we have stocks, which I divide them geographically into Canadian stocks and US stocks, and I have a small stake in crypto as well. This is the Excel sheet that I use to track my personal investment and also my wife investment as one grand portfolio. And as you can see here, we have a mix of flat and red positions and only a few really green stocks here, like Google, PayPal, and Aritzia. Other than these 3 stocks, most of the companies we have are in red, and some of them, like Meta, is down significantly over the past year, which seems really disappointing, but I'm not worried about the short-term performance of my stocks. The portfolio annual dividend is close to $1,336 per year, which is totally tax-free as all of our dividend stocks are inside TFSA. And the yield of the portfolio is around 1.83%. This is a nice graphical representation of the stocks we hold in this grand portfolio. The majority of these positions are tech and financial stocks, mixed with some REITs and consumer discretionary stocks. As you can see, I tried to balance this portfolio in the last few months by adding to my smaller positions. Interesting fact is that Aritzia is now the largest holding in this grand portfolio, which is definitely due to poor performance of Meta and Google in the last year. This is where I track the returns of the grand portfolio against S&P 500 and also our initial deposits. As you can see here, we consistently deposit cash and buy stocks in these portfolios, and fortunately the performance of our portfolio was better than S&P 500 so far, which is mainly due to good performance of Canadian stocks, especially Aritzia, and of course Google, which is still outperformed S&P 500. It is interesting to see that in both bull markets and bear markets, this portfolio is pretty much performed better than S&P 500, which is something I'm really happy to see here. Okay, now let's look at my personal WealthSimple account, excluding my wife holdings in her own portfolio. Overall, I have close to 51,800 Canadian dollar worth of stocks in this account at the moment. My TFSA, which is mostly Canadian companies and also Google, performed okay in this bad market, and it is only down 5.98%, which is, I would say, great performance compared to overall stock market in my opinion. I analyzed pretty much all of these stocks before on this channel on separate videos, and I will leave a link to those videos in the description box below. In the US side of my TFSA, Google is the only position I hold, and as you can see here, I currently own 50 shares of Google in my TFSA. Google is one of the best performers so far, and it is up 10%, which is an absolutely good performance even considering the recent market correction. Google valuation is absurdly cheap at the moment in my opinion, and I want to add to my Google position in RRSP at this price range after receiving my next paycheck. On the Canadian side of the account, I didn't have a major change, but I bought the dip on most of my holdings in the last 3 weeks using the dividends I received from my REITs and also my new deposits. Here we have Aritzia, which is a growth-focused Canadian fashion stocks, and I am up 3% at this position at the moment. I bought a few new shares of Aritzia recently, and now I own 78 shares in my TFSA. My wife also holds close to 140 shares of Aritzia in her TFSA, and overall this is our largest position in our portfolio so far, which is a surprise because I didn't really anticipate that Aritzia be able to perform so well and post those amazing revenue and income numbers in a bear market. I want to increase my ownership in Aritzia, and my goal is to buy another at least 22 shares to have 100 shares of Aritzia here in my TFSA. The next position is Brookfield Asset Management. I'm down 14% on this position at the moment. They recently announced a special distribution of their asset management business as a separate publicly traded company, and I will use that distribution when it happens to add to my Brookfield position. I don't have any plan to buy more Brookfield Asset Management at this point, as I'm happy with the number of shares I own. The next two positions are Bank of Nova Scotia and EQ Bank, which are both amazing Canadian banks. I'm down 20 and 26% on these two positions respectively, which seems like very bad performance. I just bought 10 more shares of EQ Bank, as in my opinion it is extremely undervalued at the moment, and I will continue to add at these levels to my EQ Bank positions aggressively. Regarding Bank of Nova Scotia, I don't have any plan to sell my shares, at least for the next 10 years. I will just try to add to my shares during these tips slowly. Next, I have two REITs, Granite REIT, which is an industrial real estate company with many large warehouses around Canada, US, Europe, and Killam REIT, which is a residential real estate company in Eastern Canada. Both are amazing REITs with both growth potential and consistently monthly dividend. I'm down 23 and 22% on these positions as well. I bought a few more shares of Killam in the past 2 weeks to bring my average cost down, and definitely want to add more to Granite via new deposits in the coming weeks. Next, I have Power Corporation of Canada, which is mainly an insurance business with a strong balance sheet and consistent dividend increases. I'm down 15% on this position. I like to own 200 shares of Power Corp, so I still should add a lot more shares to this position. Finally, I have TD Bank, which is pretty much flat. TD is also one of the positions that I will probably never sell it and just try to collect those dividends and reinvest the cash flow into my other stocks. Next, let's look at the RRSP performance. I plan to hold most of my US stocks here. RRSP portfolio is down a whopping 23%. My biggest investment here so far was Meta Platforms or Facebook, which is down 52% with a terrible performance. It is a scary number if you lose half of your investment in basically one position, but this is only a loss on a paper, as I am absolutely sure that Meta will rebound in the future, as it is definitely undervalued here. I own 10 shares of Google in my RRSP too, and I'm down 12% on these 10 shares. Other positions are in green by a low margin. Amazon is up 1% and PayPal is up 6%. Unfortunately, my Amazon and PayPal positions are still pretty small, and I want to build a much larger position in these two companies. Regarding my RRSP strategy, I want to add to Amazon and Google here at the moment, and if I have extra cash, I will also want to add to Meta. So overall, my plan with all these stocks that I show you today is to hold or add to them during these dips. I did not sell any of these stocks during the recent market downturn, and even if we go down another 30%, I will still hold these stocks as I analyze each and every company I buy, and therefore I'm not going to emotionally react to price action of these stocks. These are my assets, and I know the value of my assets, so I'm not going to just sell them for low offers out there. There you are, guys. I hope you enjoyed the video and my transparency in showing you all the positions I have in my own portfolio and also the performance of our stocks. If you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.